good day, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is your weekend edition for Saturday, December 20th, 2025. What a day. It was triple witching, and that always brings volatility, but it was exceptionally big volume. Volume that probably haven't seen in a long time, if ever. I mean, it was 50%, as they say, bigger than the average. So I don't know. We'll hear if it was records or not. I didn't pay attention to that, but I just know it was one heck of a day. And you closed higher. So the question is this the beginning of the Santa Claus rally or not? So there's a question about that, and let's talk about that right now. First, there are no major U.S. economic reports scheduled for Monday. Second, remember it's a shortened trading week because of the Christmas holiday. And third, the Santa Claus rally. Since 1928, the S&P has climbed 75% of the time in the last 2 weeks of December, rising on average 1.3%, according to data compiled by Ken Griffin's Citadel Securities. The original Santa Claus rally doesn't deal with that time span. It deals with what happens right in front of Christmas and right after. It encompasses the last 5 trading sessions of the year and the first 2 days of the new one. So, nice rally that we had, a little bit early. Now we'll see if the market can build on that and run with it. But those are your definitions. And no, the market is not limited to that. Why? Because if you go to services like the Moore Research Center and you look at what the S&Ps do and some of the other indices, they typically rally from the 18th through the 21st of December. They begin a rally and they go to around the 15th of February. So we will see if those patterns go out. The important thing is we're in the zone where the market normally rallies. Let's leave it at that, and that's what this is all about. Tesla gave back a little bit on Friday, but look at what's happening. Rivian's taking off again. Had a nice day to the upside, up $2 here. Coin rallied nicely. I'm thinking that IBIT and Bitcoin probably aren't going to make new lows after the recent lows that they've just made. Disney down a little with Home Depot. Netflix gained a little bit back more. Not a lot, but a little bit. And, you know, we've got to start broadening what we look at. I don't think 2026 is going to be the year where it's going to be the Mag 7 that just keep driving the market. I'm already seeing movement into retail. I'm seeing movement into other parts. FedEx is shaking off, getting out of the business, as others have with some of these let's call them the retail end of the game, just only declaring that and shaking off where you're going. Amazon had a big move. Amazon made an announcement that they're going to lay off another 14,000 people as a direct response to artificial intelligence, which is removing jobs. I think it's up to 30,000 now that artificial intelligence has removed net, according to them, because they're finding savings using the artificial intelligence. So we keep hearing people talk about, well, artificial intelligence is going to do this, going to do that, create new jobs. I want to see where it creates a new job. So far, my impression, that's all I can say, is that it's costing jobs. Nobody's paying attention to AMC but me. And if you'll recall, every time they've done something, I said this is a doomed stock. Well, now you're down to $1.75 a share if you haven't been paying attention to it. Uranium's still okay. Let's go to Gap. We haven't looked at this, period. And the market's been on a tear on a weekly chart since back here. It bottomed out. It didn't make a lower low starting this week, which was October 10th. And then we've had a succession of higher lows and into the higher highs. On the swing line, you see it right here, a low, each one higher than the prior one. The market's had a bullish crossover where the 18-week average, I don't know if I'll be able to get this to do what I want. I think I will, yeah. Watch this. Where the 18-week average is about to cross over right here. This was November 21st, the 100-day, giving you a bullish setup. Now you've got the 18 over the 100 over the 200-day average, and this is what the market did with all that. So I think that you're looking at something that pros are going to start looking at this in a very constructive way and say they've got their mojo back. Would I recommend you buy it up here? No. Wait for the pullbacks is what I would be recommending. You don't have to listen to me because I don't make recommendations in these tapes, but I can tell you that why am I saying what I am? I can explain that. You only stay over the Bollinger Band 5% of the time. You can run it as you're doing here. And this is called running it. This is what I call a gorilla glue trade. It's where each week you keep hitting the upper band, driving it higher, and in the process you form the slow stochastic and get both numbers that make it up. One's called a K line, the red, and the blue is the D, and they're going sideways over 80. And when they do it for 3 weeks in a row, which just happened on big breaks, the pros, in my opinion, buy the market until the red line closes under 79. AMD, as good as it's been doing, it's come back and it's fighting a major battle at the 18-week moving average of closes right here. To get me bullish, you've got to cross over 225.98. Without doing that, I don't see anything I like. In Rivian, I've been covering this with you now for about a year and a half, and I said their R2 model is going to kick this company, and I keep reading how many different showrooms and facilities they're building out, especially in Illinois, since the car's built in Normal, Illinois. And, once you get a $45,000 car that can compete with Tesla and others, you've got another vehicle out there that's important at the time that Ford and GM and others are pulling back a bit on the market. And their software is, as you know, being leased out by other companies. It's quite good. Lululemon. If Gap is good, what about Lulu? Well, changes of management make things come alive. Changes of focus. Lulu did phenomenal during COVID. Everybody was wearing it. It was fine. And then as we got away from that and people returned to more normal lives, it lost its mojo. Well, now on the chart, it's getting it back. No, I would not tell you to buy Bollinger Bands, but I would certainly be looking hard on breaks at the 18-week average of closes. Rocket Mortgage, is it going to finally get to the point where it could begin staying over a test of the 18-week average? We're going to know now. If it clears this week's high, why can't it get back up there? No reason that I see that it can't. Home Depot just can't get out of its own way. Each time it tries to rally, it gets thrown back. I wouldn't be a hero in that. And Uber going down for the 100-week average of closes. Look at how weak this is right now. I mean, this is really a stock that was just, and I want to use the word just, at 100.35, and now you're sitting here at 78.31 as a low. That's a heck of a drop. It's 20-some odd percent. FedEx, as I said, FedEx has come alive again. The market was in a big downtrend that you can go back to November 29th, and then the market, and by the way, that's November of what year? 2024. Got that? Went down and actually made its low on April 11th of 2025. So it stayed down quite a while. And then the market finally started fighting a battle at the 18-week average and recovered from it. And now the market's in a whole different spectrum. It's got the embedded reading. It hits the Bollinger Band. It falls back. It is still, in my opinion, a stock that is looking quite good. In XLI, the industrial sector, it's overbought. It refuses to set up a real trend so far. It's got a lower low, higher high, and it's caught between the upper and lower Bollinger Bands. On the energy sector, this is the first close in a while under the 18-week and the 100-week average of closes. Can it build on it? That's the big question. You did take out this low of 43.90. If it can accelerate, 42.67s could be in the cards. In the dollar index, you can see how you've pulled back to the 18-week average of closes and you held it. I'd like to see over the next 2 weeks or so where the market starts faltering here and then throws out another sell. I happen to think that ultimately we're going to the lower Bollinger Band, if not lower in this chart. In Spider, that's the gold shares, okay? I did this wrong. I put Spider. It's GLD. I can't believe I did that. You get dizzy when you keep having to put these in. It's GLD, and it's just in a tear to the upside. It is overbought. It's not an embedded play at this point in time. That's not even week one back there. Week one just happened. Now, I wouldn't have you go chasing it. Copper, I've been super bullish on, as you know, fighting with a number of other brokerage firms that have put out all kinds of ratings that, oh, it's not going to go. I have told you there would be a squeeze. There was in London. Then I told you with what you've now experienced with in Peru and Chile, losing the two major mines, about a third of the production that's supposed to last well into this year coming up. You've got shortage of supply. Now you've got lower interest rates and economies are trying to spur demand on. So shorter supply, demand spurring on, and it looks to me like you can go higher. So I put it all together. I look at what the charts are doing. I'm just jumping around here and showing you how the different charts could look at any point in time. And I like what I'm basically saying. All right. So I think the market could have legs right into the beginning of January. I would use opportunities on pullbacks to take a hard look, and we'll cover that on the daily reviews and, of course, in my subscriber videos. But you're going to get an interesting situation because so many people are leaving for holiday. And as they do so, it offers day trading opportunities. And you're going to get that. One of the popular things I've learned to use is what's called pivot points. And it's just for day trading. It is not for carrying positions or anything. It gives you 5 numbers that you can work with, 2 sell above the market, 2 below it. And then I tie it with momentum. I made a free course out of it so you could see it. You can follow this on your own charts and apply the principles I have and see if that works for you. But I use it during the week, whether for not day trading, for entry points. I've got a spot that I want to come in the market. It may not be there. You might want to look at it. Go to IraEpstein.com or move your cursor up to the top here. There'll be an icon, or over here if you're watching us on YouTube. I'm Ira. Watch us in the other videos over the weekend, and I'll see you come Monday. Take care.